Hi, everyone. Turnaround Tuesday has been rescheduled for tomorrow. Hi, Steven, Sinatra, AJ, Angelo, Mustafa, Salam, Richard, Jay.
Morning, Dale.
Hey, Ryan. Jay, I don't think the yen's going to 170. Okay. Anyway,
Hey?
not this week. Anyway, that's a technical target of the rectangle. Okay. So, yeah, that could happen. Look, nothing surprises me anymore. So good to have you back, Ryan.
Yeah,
What do you
thanks,
think?
mate.
What are you thinking day before the Fed?
Good
Trading
morning,
more-
Dale. Personally, I don't see any charts. Okay, now I see your screen.
Thanks, Steve.
Yeah, a bit of treading water, mate. I think is looking at this at the moment. You look at something like dollar yen right in the middle of the range, 145, 141.50. Pretty much bang in the middle. Euro dollar, wandering around that parity mark. It's we're doing that thing, aren't we? Let's wait and see what happens, and then we start second guessing what they're going to do next after that.
Yeah.
We're always waiting for something, aren't we?
Yeah. Yeah, just an observation again, yields at making new highs again here.
Yeah, that's been a bit of a strange one. It's kicking on up, but it's not really pulling anything with it. I mean, we got dollar yen up to sort of what do we get up to the 80s, 143.80s.
Yeah.
But
It wants these stops, Ryan, doesn't it? Over 3.5. I mean, because we didn't take out this high here, and then we came off. So shorts feel like they have a chance after not taking out their stop here. And maybe we get some type of stop hunt above there, or, rectangle breakout, or, I'm an amateur Elliotician, but, looks like some type of triangle. Sometimes they could be a 4. And then you get one more thrust out of it and it's terminal. So just something to keep in mind.
Yeah, that could be it. If the Fed, do the unthinkable and go 100, 145 will probably be toast. Pretty quickly. But I think we've had the expectations drawn down a bit this morning. We've had Timmy Leaks, as we call him, that bloke from the WSJ, saying 75 pips is likely what's going to happen. Everyone's expecting 75 pips. Only a few are expecting 100 pips. So we were waiting on him to pop up after the CPI to give us an indication on whether they're really looking at the 100 pip move. He's said to be a bit of a Fed insider. So the fact he's come out with this morning probably put pay to a lot of 100 pip hopes.
EG putting in a negative day. I just noticed it didn't confirm here on the daily about the 4. Yeah. Correction time back to 85.5 or so.
It might be a bit tough getting down there, but lots to come from the UK as well. Friday we've got a mini budget, so everyone's going to be looking at tax cuts and how Liz Truss is going to open the purse strings. So we could see a bit of movement in the quid.
Yeah, I mean, Blake was featuring it yesterday and, talked about this and said, well, I don't know if I'd be short. But I said the same thing here, which was correct. For about 200-300 pips, I wouldn't be short. I wouldn't be short here either.
Yeah.
Unless you're looking for some type of acceleration under this wedge line and really some type of major waterfall event, have an overthrow. This is a pretty glaring divergence. I don't have to use my cursor to look at this. It's the same way it looked on the 4-hour back here it was back here. Okay, so you had that glaring divergence, and this was a rally back to major resistance. Blake identified a pretty good level at 33.5 in Canada. And while I was talking about it, it was right up there. It came off pretty good yesterday. Maybe another push.
That was actually a couple of our traders. Somebody in the chat room. And good morning, by the way. Somebody in the chat room identified that the big fib level up there, and it did come off yesterday from there.
Yeah. So intelligence gathering and ForexAnalytix chat. Be there. And then S&Ps, you know, the trend break, rallied back and coming off again. I've heard numbers like 3780 before there's any kind of bear market rally. That wouldn't take much tomorrow to take it down there, would it? So that's kind of what the board is saying. Higher rates, yen not keeping pace with it, euro, you know, vulnerable on a hikes. Be interesting to see if it makes new highs. Dollar looks like it's a layup to make a new high, and it's kind of surprising actually. The yen is kind of taking up the rear. But I know I'm going to try something up here. I'll watch the action over 45 if we get something from Powell to take it up. And then, you know, you don't have to short it right away. Normally, if it's a stop hunt, it won't take these highs out by more than 50 pips. And then even though it does that, you just wait for it to trade back under 45. And that's a signal, okay? You don't know if it's a failure until it begins to fail. And after taking this out, that would be your first sign. You guys agree?
Yep. Look for the confirmation.
Yeah. So that's it. Platinum, you know, did an interview with this guy, David Morgan, who's been in the precious metal business for a long time. He said this one trader taught him that the white stuff goes first. Okay, so silver's white, platinum's white. I don't know the color of palladium. I don't have it up here, but you know, with what gold's done, palladium is, you know, put on a pretty good run here. I don't know if palladium's going to make a new low, even if gold goes to Greg is 1600, and some people are talking 1670, and gold definitely another test, right? So you know, it's tried it a couple times, tried it again. You know, with a little ABC up here, couldn't get through it. So we know that's an important number there, don't we?
Yeah, talking about this on the Flow Show. A bit surprised it hasn't pushed a bit further south. So a bit of caution there, but it's holding below that level.
Well, it's waiting for Powell to, you know, flush the chain, you know, pull the chain. Don't you think?
That'd be nice. Yeah, after rumors finish short, so that'd be nice.
Yeah. And Aussie, Blake, you were talking about on your long-term chart, 64 is a long-term target where you would start buying Aussie.
Yeah, it is.
Correctly.
It is. I mean, you know, I am interested down at these levels. What I'm not interested in is I'm not interested in where equities are. One of the big rejections overnight was the S&P at 39.15. We sat in the chat room literally all day yesterday between myself and the few people that were there, and just talked about the S&P grinding higher, breaking 3900, and then once it broke the 3900, we're like 39.15 is going to cap it because it's the underside of that trend line that you're showing right there, because that's a big deal. I mean, and we just stopped there, and now we're reversing on a dime, and
respected it.
Yeah, we respected it too, like almost to a T. So you know, while we're below that, I think you have to be really, really careful, like buying risk. And one of the things would be, buying risk would be buying the Aussie. So you got to be a little careful doing that, right? So and then also one of the other things that worries me a little bit about the Aussie is I actually just started selling some Aussie Kiwi today. Now that doesn't necessarily mean that the Aussie is going to, you know, go down because the Aussie Kiwi is going down. What'll probably happen is you're just going to see an outperformance of the, if Kiwi. It does reverse, you'll see an outperformance of the Kiwi versus the Aussie versus any Aussie like material weakness. But it is something worth noting as well. So that's something that that I'm personally doing right now. So
I just want to show a couple things in like this the gold shares, you know. I was taught that the shares turn before the bullion, and you know, this is Newmont, which really looked terrible for quite a long time after an earnings report. has made a new low, but when gold broke down this time, it didn't make a new low. So
That's
also,
interesting.
yeah, and here's one I own. Gold, this was not when gold made a new low. This was before it, and then gold made, and chart doesn't look bad. This is a B2 gold, and even some of the silver stocks, and this was one of the things that kind of gave me hope in silver, was when silver was making a new low, First Majestic wasn't. So I think there's some flow into the miners now, which is what you want to see. So let's say gold goes to 330. I'm aiming with 330. What is it?
I was going to say we're going to 330 in gold.
Yeah, I'm Henrik now. So say it goes to 1630.
Man, you just took us all the way back to 1990 something or 80 something.
Yeah, I remember that's when people said gold didn't work anymore. It was an archaic relic.
Right.
Yeah. So anyway, if gold does make a new low, keep an eye on a few of the miners with Newmont supposedly best of breed. See what it's doing. Even if it makes a new low, it's not going to confirm. So anyway, Newmont looks to be turning the corner. And then let's see, I'm going to turn it over to you guys, but I just want to show you guys something on the long-term chart in silver and why I'm kind of excited about it long-term. Look at this space. Okay, really, it's done nothing since 2011, right?
Yeah.
But look at this base that we came out of after COVID and just correcting. And look at this high, it's a confirmed high. And if we hold here and start taking out 27, I think that my call is that it goes to 60 above this high, which was 50. And I'm basing it upon gold getting to eventually 2,500 and the gold silver ratio trading back to the mean, which is about 40. So if gold gets to 2,400, that would be $60 silver at 40-1 on the gold silver ratio.
Wow, Stelios just perked up and went, "What? What did you say?"
You like that? You like that stuff? I mean,
Well, I want to be in the trade. I want to be in the trade when that happens.
Okay, you will be.
Yeah.
So anyway, I'm just, looking into the future, like Larry Williams says, we have to live in the future.
Well, you got to. Well, with the markets, like any market, you got to imagine, right? You got to imagine what you think is going to happen. Now, that doesn't. I mean, it will. Try to explain.
You could be delusional, like I will.
Right. I mean, I try to explain to people, like, look, I think things are going to happen. That doesn't mean they're going to happen because I'm not. But you try to anticipate and you plan for those types of moves. I just want to point out gold is still below 1680. And if you saw it last night or yesterday, rather, if I know a lot of you were out yesterday because of what the Queen and everything else, but you can see just multiple times that that gold just continues to knock its head up against 1680. And to be completely frank here, I don't think that's going to break today. I mean, I would be surprised if it broke today ahead of the FOMC tomorrow, but I mean, it could. I would be surprised if it did.
Don't give it the kiss of death, please, Frank.
What's that?
I said, don't give it the kiss of death, please, Frank. We're all short.
well, I mean, if you guys are short, then it's definitely going to go lower. Definitely. Like, I guarantee it. I'm joking. I'm joking with that. I'm giving
everyone out.
I think gold is relatively easy to trade at this point. If you want to be long, you really need to get a daily close. I said this on the flow show this morning, either a daily close or even better, weekly close above 1680. That will definitely turn me bullish. Oops. At the moment, I'm still short half the position and I have my stop at 1686 or 87. What was my entry? I can't remember. 87. Chasing it down here now, probably not the right idea. Definitely not before the FOMC. So, And
Yeah, I
Sansi, not everybody is short. We are short, right? Not the
Yeah,
whole
I mean, you just have to, I do believe while you're below 1700, you can't be bullish, but we get above 1700, especially like, first of all, you got it 1680 is the spike low right here from July, right? But 1690 is this low right here. So really, if you get above 1690, so I like to use the round number because that gets a lot of people's attention. Meaning like if you're just kind of a bystander in gold and you're like, oh, it's back above 1700, you're not saying, oh, it's back above 1690. You're just, if you're, kind of a tourist in gold, you're really going to be looking more for the round number. But my opinion, you start getting above those levels, 1690, 1700, then you start risking a false breakdown. And I think that is what we have to look for tomorrow. And so let's talk about tomorrow a little bit. Well, first of all, I know Ryan came in, Stelios, you guys are around during the European hours. What happened with the Riksbank? You had Switzerland.
Switzerland.
I just said Switzerland.
Sweden.
Sorry, Sweden.
Yeah.
It's early in the morning for me. Sorry.
Doesn't know his countries.
Yeah, whatever.
Typical American.
Some
No, I'm
Nordic,
kidding.
some Nordic something or other. No, but you had the Riksbank raise rates a full
Look at the
basis
1 minute
point.
chart. Look at the 1 minute chart. Yeah.
Yeah. I mean, it's like you got this move lower, as you would expect on a more aggressively hawkish, bank, and then here we are actually reversing it all the way around. So, what do you make of that move?
I think two forces playing here. One, the dollar is strengthening, and then two, the market believing that this is front loading, and that they're not going to. Doing more now means less later. I don't know if I believe that, but
okay, that's a good. You know what? Hold that thought really quick. We haven't heard from Ryan and K-Man regarding this. So, Ryan, what do you think?
I haven't heard from K-Man at all yet.
Let K in.
Yeah, let K in the action.
Bring the caveman.
I will speak when I'm spoken to. Good morning, everybody.
Good morning, K-Man. You are being spoken to. What do you think of the Riksbank here? What do you think of this action?
Stop loss hunt, algo, rip on the stocky, and then but it's what I was saying on the flow show with the Riksbank. You never know what they are really thinking. So they did 100. It is front loading, and at the same time they were saying like, but we might still sell a bit of Swedish krona for God knows whatever it is. They still are doing. They're still buying assets. So you can do 100 BPs, but then if you continue to buy assets, you keep the rest. You keep the yields actually a bit depressed. So the market quickly reversed on that, and then the rest, is likely dollar buying. We're seeing it across the board. Really, I mean, we didn't even have the time to react or not in time, at least. I think Raphael did on our chat room. He picked it up around the 1070 area, and he had a quick run on it. So that's a really nice trade. But I think really personally moving on.
Yeah. Okay. All right. It's interesting about this price action is you think like let's like fast forward into tomorrow. Now, I don't think the Fed's going to deliver a full percentage point. And based on your comments earlier, Ryan, that came from Nick I always can never pronounce his last name. Timoros. Throw a little bit of cold water on a full basis point hike, but even if the Fed actually delivered something like that, I would still think it's front loaded. I would actually sell the dollar on a too aggressive of a hike, me personally. But I don't think that's going to be the case. I think we're going to get 75 basis points tomorrow, and then we're going to have to just figure out what the hell they're saying to make a response. I don't know if I'm off base there, or if you guys think anything differently, but that's kind of where I'm at as far as my head goes. But it's interesting how front loaded move like this, the market might anticipate that and fade it, because that was my thought process going into this weekend. I'm like, okay, if the Fed, really does deliver, a full percentage point, it would be a dovish hike in a sense. But anyway, it is interesting watching, after the Riksbank today. Now, Martin.
So if they hike 75 basis points, it's a normal hike. But if they hike 100 basis points, it's a dovish hike.
Well, yeah, actually, I do think so, because then the market would see it as being front loaded, like they're doing it now to get it out of the way, so they don't have to make such aggressive hikes in the future. And the market would actually respond to that. But if we only do 75 basis points, the market is looking at the terminal rate still at like 4.5%.
450, yeah.
Yeah. So here we are at 4.5%. How do you get there? It takes 75 basis points 3 times just to get us to 4.25. So I look at like a more aggressive hike, the market will go, oh, the Fed's just trying to, front load. But that's been my, expectations. I just don't know if we're going to get that. But let's talk about we do have a couple of pieces of data coming out. Well, first of all, Martin, thank you for mentioning the Swiss National Bank. Yes, the Swiss National Bank is actually on Thursday. You are correct. And that's something that...
Are you sure it's Swiss or not Sweden? I'm kidding.
No, stop harassing me.
Sorry.
Hey, you know what? You get up at 3:00 in the morning and let's see how you perform.
I know.
Yeah. Just go ahead and All right.
Anyway, break in another month, Blake. One more month, you can.
Yeah. Oh no, yeah, Steve. I'm gonna get Steve's ass out of bed at 3:15, and he's gonna be like, "What are you doing?" I'm like, "Welcome to my world." So, because he's gonna be visiting here. Something
tells me I'm going to be moving to a hotel very soon after.
Yeah, right. Anyway, as far as the Swiss National Bank, there isn't a whole lot to do here, but we do have inflation data coming out of Canada. Now, one of the things about the dollar CAD, it is at a long-term 50% retracement, like on a, this is the post-COVID spike high, right? And then the low, we're at the 50% retracement. We're also at a loose channel resistance, and you can see drawing the lower trend line was easy. The upper trend line, you kind of got to push it through a couple of wicks, but that all comes in right around the 133.50 level. Now, I don't necessarily want to be bearish the dollar CAD, but I think the inflation data, if it is strong today, and that could give us a reason to come right back down to the 132.10 breakout point. But let's all respect the fact that we are in an ascending channel, and it was a bullish breakout just over the last couple of days. So that's going to be, I think, important as we go into this Canadian inflation data. I mean, because it is still moving the market, right? I mean, that's the way we have to look at it. It is still, pushing us up there. So what are your thoughts, guys? Any thoughts going into the Canadian data?
Not really. I was going to say something about yields, but let's talk about Canadian first.
Oh, I want to sell it, Blake, after the Fed if it's above 50 for a third drive.
So you're looking for a third drive up here above the 50% retrace. Right, look, this is 161% extension of the last leg lower, so I'd be more than happy to sell it up there.
Yeah, that's what I'm thinking. Yeah. 1, 2, 3, and especially if the RSI, and I don't think it will, it'll put in its second lower high.
So we'll do like this, and we're gonna end up being a lower high, so it'll end up being divergent. And
I don't even think it'll get up that high on a, what are we talking about? Another 80 pips? 90 pips. Yeah.
Okay. All right. Well, I think that's a good idea following the FOMC. What's that?
It's an idea.
It is an idea. I like it. And I do have to say, I mean, you can see how respected this 132, 10, 15 level is. Yeah. And that's only 70 pips away from where we're at. So if we have the CPI data that comes in rather hot, let's open Data Flash and see what we've got here for CPI. Let's say CPI doesn't come in, negative 0.1%. Let's say it comes in flat, and the year over year CPI comes in a little bit hotter than 7.3. Maybe that is the reason why, we see us drop back down to the support and maybe bounce right off of it. So that's going to be interesting to watch. Now, Stelios, you want to talk a little bit about yields? Why is that?
I just wanted to point out that 10-year US is making new highs, but obviously
Dale, Dale brought that up a little bit earlier.
Oh, did he? Maybe I missed that. Sorry.
Yields are no, it's fine. Yields are breaking out. We should talk about it because here you go.
Yeah, under normal circumstances, I would have made that a very bullish technical event. But with the Fed tomorrow, I kind of need to be a little bit more wary than usual. But we are breaking out. And that's what we were talking about in the flow show as well with Ryan, with yields breaking out, the dollar going higher, and gold is still not, I thought it would have been to like 1630 by now, and it's still kind of trying hard. So that's one of my worries, being short the second half of my position. I would have expected this to have basically hit my target by now, but it's not there yet.
So Ryan, did you hear that? That was a shot across the bow on your gold
we agreed.
Shorts.
We agreed on
that. All right. When we have a chat there, Blake.
What's that?
We lob pleasantries at each other.
You do, pleasantries. Okay. Let's talk about the S&P because this is a big deal. Yesterday, here I'll just I'll give you guys a little bit of action of when nobody was there but a few of us North American people yesterday, because you guys were not around. So you guys continue to go on and on and on. Okay, so God, you guys have talked a lot this morning. It's like you guys have been out for like 3 days. So you can see we were talking about about the S&P yesterday, and between myself and Joe, who's right here, Ripsters, we were just talking, talking about the S&P and where it was at, and that it would this 39.15 is going to be a you can see it right here. The 39.15 underside of this trend line, you can see I drew a blue line right there, is going to be a real big deal overnight. And we were all discussing about how it'll eventually get there. Well, the S&P did, and of course I was asleep when we're up at those levels, but this has been a big rejection up here, and I think while we're below 39.15, you've got to be real careful about being long stocks. But with tomorrow's FOMC, there is a risk that we could get it back above that, especially if the market feels that the Fed is, for some reason being a little bit more dovish. But it's hard being bullish stocks right now, right?
Yeah.
Yeah. I mean, it really is with that rejection up here. So you can see big trend line, previous trend line being broken. That's the underside of that trend line. And while we're below it, you gotta think kind of bearish here. And look at the euro. The euro is breaking down. And didn't we have German PPI come in higher than expected?
Yeah. I mean, did you see a number?
German PPI was a blowout number.
45.8% up from 37 last print.
God.
Nothing to see here.
Yeah.
Inflation has peaked.
Look at this. I mean, look at this data that came out, this German PPI data and the euro is just getting blasted at the moment. Interesting.
Yeah.
Okay, well, we have guys in about 2 minutes, less than a minute, we have data coming out. So let's pull up the Canadian really quick, give us a quick view of the dollar CAD. I know we were just talking about it, but one of the other things, I'm short Canadian yen. I've been short it since 110 up here. 110.30 is my entry, and everybody knows, if you're in the ForexAnalytix community, you can see I post my open trades. I'm short way up here at 110.30. I'm looking to add, but you got to think, if it's breaking down here, that means that dollar CAD is actually breaking out to the upside. So it's going to be interesting to watch this one as we have inflation data coming out. Let me pull up the data flash. By the way, the data flash is what you guys get, one of the tools with ForexAnalytix. This will show you the releases that's coming out. We do have some housing data coming out as well. Building permits. Here's all your Canadian data, weaker than expected. Woo. The dollar, the Canadian yen is coming down. So
US housing numbers kind of in line. One is weaker, one is stronger.
Yeah.
Canadian yen coming down, which I'm happy about.
Nice.
Yeah, I want that to break
Maybe
down.
this breakdown sticks, unlike the one.
Well, one of the reasons why I'm short in the Canadian yen, and I've talked a lot about this over the last 2 weeks, even on the trade-off on the Pepperstone show, is that you've got false breakouts in New Zealand yen, Aussie yen, Guppy, Euro yen, all false breakouts, and the Canadian yen's last to follow. So if we break back below, 107, whatever, 50, 30, that's going to be pretty bearish. But all right, well,
that's an example, guys.
USDCAD completely unfazed from the data. It's like nothing happened.
Well, we just we'll
be up at that range into the Fed tomorrow.
What's that?
We could be up in that range for the Fed tomorrow.
That you're talking about, Dale. Yeah, you're right. I mean, we got a little 30 pip move. So,
and you know what? Lydia's not here, but I just want to say to the crowd that the way Blake just structured his trade is the advantage of having a holistic view of currencies. And you notice that a lot from K-Man and Ryan too, that they see the whole picture and the relationships, and it gives them market tells and reasons that even if they miss a leading move, that there's something else for them to do. And that takes really knowing the whole board. So learn it, and you'll have the same advantage of seeing the whole picture instead of just your 15-minute tick chart.
Yeah, I mean, I think thanks Dale. And one of the benefits of being like inside the ForexAnalytix community is being able to leverage talking to not just me, it's the rest of the team and other traders that are just like you, and just being able to talk it out, and that's the important part of having a community. Speaking of which, if you want to learn how to get involved in the ForexAnalytix community, well, first of all, we are raising our prices towards the end of this month. Like here in the next week, we're going to be raising our prices to $189 a month from $119 a month. So if you want to lock in and grandfather in your prices, this is the week to do it. So you might as well just get on with it and jump in the ForexAnalytix community. We do have people that have been paying in the ForexAnalytix community for the last 5 or 6 years, our beloved longer term subscribers, but they are paying at a much lower rate because we grandfather in those prices. So if you want to keep these prices as long as you're with us, do it. This is the time to do it because our prices are going to go up. Our costs are rising across the board, and so it's something we had to do. Also, if you want to take advantage of ForexAnalytix and get it free for a period of time, come see if you can trade our money. Go to the trader funding program site. And if you join this community and you learn how to trade our money and you pass your assessment, you're going to get ForexAnalytix for free for a certain period of time, because we want you in our community talking with myself, the rest of the team, learning what ideas, what trades are developing, because we don't want to leave you out on a limb. So, if you want to learn more about that and how that works, there's a 2-minute video on the Trader Funding Program website. All right. Is Lydia here, Dale?
No, unusual.
That is unusual. She's always spot on. She's been a guest of yours probably a dozen times. Lydia knows me from the Wise Trade days.
She said she learned from you.
Yep. I taught her how to trade. I taught her how to trade in person back in like 2005.
Wow.
Something like that. Yep.
Yeah.
I didn't know that.
Yeah, she was in in LA. I don't know, we were in some hotel, with about another 60 or 80 people, and I was teaching her.
I'd end that story right there. You were in the hotel together.
No, not that.
That was for Steve. So.
You were in a hotel together and you taught her something.
But I remember meeting her in person. I believe she was with her husband at that point.
Yeah, there you go.
Oh, now it becomes a lot more kinky.
Yeah,
now that you put it like that.
Okay, let's stop that.
I mean, hey, come on. No, she's really
She's a great lady who's
you guys are the ones
busy.
that are taking it sideways.
Yeah, she's real busy
animals.
doing a lot
My
of
God.
What's that? Doing a lot of venture capital deals and stuff. She's expanded from just being FX.
Yeah, years, I think it's awesome. It's cool. It's cool to see.
Anyway, I'll reschedule her. So
yeah, that's all. It's all good. Oh well, then since we have a little bit of time, time to go on here. So let's just really quick. You're looking at the S&P and you're like, oh my God, we're down like 1% today. Just realize we were down here yesterday. It's not like we're, even close to where we were at yesterday at the open. So we still have, I mean, if you think about it, a lot of you are like, oh my God, we're selling off here. We could still drop another 1.5% and still be within, the range of where we were at yesterday. So keep that in mind going into today. I don't think this is anything more than a rejection off key resistance, and we're pulling back, and we drew that blue line here yesterday. I mean, you can just see how important it is. Any other setups that you guys are looking at? How about let's go around the board, and then we'll head on out. Let's start with K-Man. Are you still here? He is not here. It looks like he checked out. Ryan, what are you seeing? And I see Greg is here, so we're going to talk to Greg here in a second. So Ryan, anything that you're looking at in particular that's a mover?
Yeah, I'm keeping an eye on Euro Sterling. If we get a test of that 87, 86, 90 area, if it confirms the breakthrough, I might look at a little sniff there long. But otherwise, I'm just giving up for the Fed mainly. My main trade idea is if we see big disappointment from a 75 pip hike, maybe to look at that. But also keep an eye on the Bank of Japan. Could be a big one this month. Inflation was up 3% in the core and 2.8, I think, off the top of my head on the normal number. So it's still climbing there. May force the Bank of Japan into at least changing some language on Thursday.
God, I hope so. All right.
Maybe that's why we're trading like we're in the eye of a hurricane right now in the end.
Right. Yeah. You can almost hear the birds singing and chirping while you're in the middle of that hurricane, right?
Yeah.
It's by the way, I've been through those tornadoes or cyclones in the Pacific Ocean. It's the weirdest thing when you have 150 mile per hour winds, and all of a sudden it goes like, birds chirping, sun is shining, and then you're in the middle of it. It's really wild. But yeah, you're good point, Dale. All right, thanks, Ryan. What are you looking at, Stelios? You might have checked out too.
He's gone too.
Yeah, his
holidays to Switzerland.
Yeah, he's off to
Have they got
the
beaches?
Netherlands. He just went to the Netherlands. I don't even know where that's at. Hey, Grega, speaking of which, Grega's in Romania. I mean, Slovakia, wherever the hell he's at. Joking, Grega. Good morning. How you doing? What's going on?
Eurasia somewhere.
All right, very good. Did you say Eurasia? All right. So what are you looking at right now? What are you keeping on your radar?
Well, I still think that US yields could finally now rally towards 4% that we talked about last week. We broke the new high. So I think that this current euro-dollar weakness will just accelerate to a new low. I think that there will be no any major changes in trends till tomorrow, maybe when we get this FOMC decision. So we also shared this PIP short on the euro-dollar based on the Elliott wave setup. Actually, I shared it actually in the chat room. It's been very nice 5-wave drop from last week, September 12 highs. And now we got 3-wave retracement up to 100.50. So it was a perfect classic bearish Elliott wave pattern, which suggests further weakness. And if we consider this with the US yield, with stocks that are still in downtrend, I just think that this so far looks like screaming for more risk off. And that
that's a great pattern in play from you, Greg. But in these pattern in plays, you can see we've in ForexAnalytix, we've been putting them up for years, and we put all the statistics. All of them are up here. You can go all the way back to the very first ones that we've done 6 years ago. So there's a lot of data here that we've done, and you can see the average wins and losses. And I was talking to somebody. Speaking of which, and sorry, Greg, I didn't mean to sidetrack you here, but if you look at our average winning percentage is at 52%. And I was talking to a pro just the other day, and he's like, dude, I wish my percentages were at 50%. It's all about risk reward. It's all about what you're risking versus reward. People think that, I need to be making money 70% of the time. It's just not necessarily the case. All right. But anyway, and that's showing you team effort, not just one person. Greg, sorry, go ahead. What else are you looking at here?
That trend line on the S&P 500 from June lows, I believe you covered, or you mentioned it as well.
Yeah.
This one has been broken and now retested after yesterday's rally.
Right.
Yep.
So I'm also seeing this as a very nice resistance. Mondays, I really try to look Mondays like a failure moves. I really don't trust the moves, especially if there are any kind of a sharp reversals. So in my opinion, that's still, as long as we are below that line, I think that we just should respect more potential weakness. Maybe at least towards 3,730. That was a swing low back from July. From mid of July. And if that would be the case, I think that Aussie is ready to take that new lows, to break the new lows as well. I think he's just sitting on that, some kind of a trend line.
Yep.
I think that there is room for further weakness.
I've thought that we could drop down into the 64-cent range. I'm not willing to play it short down here, but I get exactly what you're saying. I totally understand. All right, Gregor. Well, thank you very much. Steve, any thoughts before we go?
I think pretty much the vast majority of assets are on the on important support resistances ahead of the Fed. And there is one way of looking at it. Nice risk reward to fade the recent moves. But in my opinion, there is a very big chance that post-Fed, either immediately, as it happened with the CPI, or soon after an initial reaction, we're going to continue on the path that we've already been on.
Yeah, I hear you. All right, well, thanks, Steve. How about you, Dale? Any last minute thoughts before we head out?
Yeah, I'll be watching Canada and US dollar yen very closely tomorrow for possible terminating a stop hunt in the yen and your area for a third drive in USDCAD. All
right, well, let's see if that I'll be happy with you if and I'm going to thank Dale if we can get up here on a third drive with the dollar CAD. Like I said, I'll be happy being short Canadian yen. So good stuff. All right, guys. Well, I want to say thank you all for being here. Ryan, Steve, I know Stelios and K-Man have already left. Grega, thanks for being here this morning. And make sure you guys and gals check out Trader Funding Program. I'm going to put it in the messages here for everybody. So make sure you check this out. That's our sponsor of today's show. And make sure you take advantage of ForexAnalytix while you can, because we'd love to have you in the community, but prices are going to go up substantially. So we actually had people yesterday have locked in annual subscriptions because they don't want to have to pay almost double that moving forward. So, so it's great.
And we'll even a double is more than worth it, in my opinion.
I mean, with our team and, you know, the round, almost like literally around the clock in our chat room, just
it's
chatting
20 pips, 20 pips. Think of it that way. 20 pips a month.
That's it.
Okay. That's it. All right.
All right, Dale. Well, hey, I want to
think
thank
of everything
you so much,
in
guys.
pips. I go, how much is that lobster? How many pips?
I know. I did my Costco run is always 30 pips. $300 every time I go. 30 pips. Gotta.
Yeah. All right. Well, thanks, team. And we'll see everyone here tomorrow before the Fed and get you prepped as best we can. Have a great day. Just, sit on your hands for a day. Like I've said on Twitter a million times, great surfers don't try and catch every wave. So just paddle out and sit on your board and wait for the Fed. That's my advice.
Spoken like a true Californian.
Yeah. All right, guys. Have a great day.
Guys.
Thanks, team. Adios.